People often ask me about what kind of credit score do they need to buy a house? Do I qualify for a home? And while it's important to note that I am not a mortgage expert and mortgage advisor, so whatever I am about to tell you is my personal point of view and the information that's been given to me and should not be taken as mortgage or financial advice in any shape or form. You should always consult somebody who is authorized to give that sort of advice. But I can give you some ideas of what's important and why your credit score is important. My name is Bent Danholm, and I'm a real estate broker with Maxim Realty Orlando. And I've helped lots of people, and I've actually used to hold a mortgage license. So I do know a little bit of what I'm talking about, but I would say just still take this as more informational. If you want advice about your specific information, I'm more than happy to refer you to a trusted mortgage advisor who can give you all the information that pertains to your specific situation. So what is even your credit score? Well, think of it as when you went to school, you got a report card on a regular basis, and your credit score is your financial report card. And it's also a major factor in determining your eligibility for any loan, and specifically a home loan. It not only determines if you're eligible, it also determines what interest rate you'll be paying, what terms you can get, how much they require you to pay down on a home or any other asset you're buying. So it's really important to know what your credit score is, how high it is, how low it is, and how this whole thing works, how you can manage your credit score. Because lenders use it to assess how well you manage your finances and your debt. So, like I said, think of it as your financial report card that all lenders will review before offering you a mortgage or any other loan of any kind. So a good credit score is crucial if you want a good loan. A higher credit score not only enhances your chances of qualifying for a mortgage, it also helps you secure better terms on your mortgage, such as lower interest rates, maybe even lower closing costs for the mortgage. So, because a good credit score, it's a signal to any lender that you are a responsible and a less risky person. The idea of the credit score system is that higher the score, the lower the chance you're going to default on the loan. So obviously, the higher the score, the better terms any lender is willing to give you, because the risk of them losing money is less than if they lend money to somebody with a very low credit score. But there are some common misconceptions about, for instance, minimum credit scores. A lot of home buyers actually overestimate the credit score that's required for you to buy a home. Only about 32% of all consumers actually accurately understand what lenders require in order to lend you money. So if you're sitting out there thinking, I don't qualify for a mortgage, you might want to rethink that, because I don't know the exact percentage, but a very, very high percentage of people I talk to who think they cannot qualify for a mortgage, they actually qualify for one. I cannot tell you the exact minimum score because it all depends on the type of loan. It depends on the lender. But I can tell you that even if you have a credit score below 600, there's a pretty good chance that you can get a loan. But that statistic I just shared with you means that about 2/3 of people, that's two out of every three people, they incorrectly assume that they cannot qualify because they didn't check it and they didn't really know. They just assumed they couldn't get a mortgage. As I said before, I cannot give you exact scores because it all depends on the type of loan and the lender and all that. But the minimum credit score can, depending on the lender, be anywhere from 500 to 700, depending on, like I said, the mortgage type and the lender. Most conventional loans require a minimum score of 620 at the time of this video. That changes from time to time. But it's all important to note that the number required, the credit score required, is all based on each lender's specific criteria. Some lenders have a universal have a little bit of flexibility, and and like I said, there's no two lenders are the same. Some lenders require a higher score than others because each lender, they truly have their own standards for what they require. And it's also worth noting that lenders consider other factors than just your credit score when they make decisions, but your credit score is one of the most important factors. And even if your score is not perfect, there are still mortgage options available for you out there. So it's worth considering. And this is not the video to talk about renting versus buying, but it is a pretty universal truth that if you are renting when you could buy, all you're doing is you're making somebody else rich by paying off their mortgage when you could make yourself richer by paying off your own mortgage. Before we go any further, a little announcement. If you like these videos, if you like what I'm talking about, if you like to be kept in the loop, in the know about what's going on in the real estate world, I would strongly encourage you to follow me on social media. It's so easy. Just hit the follow button and there you go, Bob's your uncle, and you follow me. Or you could subscribe to my YouTube channel. That one is just hit subscribe and maybe hit the little notification bell so you get a notification whenever I post a new video. So what do you do if your credit score is less than good? Well, there are a few things that you can do. First of all, pay your bills on time. If you pay your bills on time, that is one of the most important things to show lenders that you are reliable, that if you pay your bills, there's a very good chance that you also pay your loans. So that includes everything from credit cards to utilities to all other regular payments. Almost all of them somehow will affect your credit, if you, in a good way if you pay them on time, and in a bad way if you don't. So consistent on-time payments are crucial for a healthy credit score. Also, pay off outstanding debt. If you reduce your debt, it lowers your risk in the eyes of lenders. But one thing that you should always remember, if you have a credit card and you paid it off, don't close it. Because one thing lenders also look at is how much of your available credit you have used. So if you, as an example, say that you have two credit cards, the limit on each is $5,000, and you manage to pay one of them off, and now the other one has a balance of, say, $3,000. That means that if you keep the one that you paid off, you have now used 30% of your available credit, which incidentally is a pretty good number for most lenders. The perfect number, I believe, is 28%. But you have now used 30% of your total available credit. So if you go and close that paid off credit card, say because you don't want to have it anymore, now you have suddenly used 60% of your available credit because you used $3,000 out of $5,000, and that badly affects your credit. So do not ever do not ever close lines of credit. Just pay them off and leave them there and use them a little bit so your lender doesn't close it for you. Now, the thing is, the longer you had an account, the more it influences your credit. So if you close off old accounts, it means that you actually shorten the time you've had credit. So just a little bit of advice. So pay it down, pay it off, but don't close it, because the less you use your available credit, the more your credit score improves. And why is that? Because it suggests to lenders that you manage your credit responsibly. I don't know if that's actually the universal truth, because in my personal opinion, if you pay off debt and close credit cards, that's also responsible, but that's not how the credit score system works. It works the other way. It means that have a lot of credit available and don't use it. That's how you improve your credit score. Also, try to avoid applying for too much credit. Opening new accounts, whether it's a car loan or a credit card or a store card or anything like that, any home loans even will negatively impact your credit score. So don't apply for credit unless you need it, and don't apply for a lot of different credits, because each application you send in can result in what they call a hard inquiry, which may or almost certainly will temporarily lower your score. And the more you get of these, the longer it takes for you to recover from that lower score. So it's much better to focus on managing your existing credit wisely rather than seeking new credit. So when you get these offers in the mail that says, no interest-free transfer if you open a credit card with us, only do it if you really need it. Otherwise, try to just pay down the ones you have and make sure that you utilize less than 30% of your total credit available. So in conclusion of all this, credit score is crucial. Your credit score plays the main role in securing a home loan. So it is true that even with less than perfect credit, there are ways you can become a homeowner, but the better the credit, the easier that those ways are and the cheaper those ways are. The best way to move forward is to work with a trusted lender, and I am happy to refer you to one because a knowledgeable lender who knows the market and who is listening to you and who is really on top of things with you can help you understand your credit score and how it impacts your mortgage options, and also help you understand what kind of mortgage you might be eligible for right now. Even if you think you're not, there's a pretty good chance that with the right lender and the right guidance, you could actually get a mortgage. So if you need a referral to one of these trusted lenders that we have, just let me know and I'm happy to refer you. I think that sort of concludes this video. Thank you so much for watching. Until next time, my name is Bent Danholm. Bye for now.